Good morning. It is Wednesday, October 9th. We've had a lot of back and forth making sure people's emotions are okay out there. Emotional exhaustion is a real thing in the stock market. Realistically, we try to bring a real perspective, and that's where technical analysis definitely helps. Just showing you, hey, these price movements are pretty normal. Let's hit the charts. Okay, so first of all, let's recap. October 3rd, last Thursday, we tested a very low level, got very close to the 200-day moving average. Not a bad thing. We rebounded quickly. The key levels you got to watch that I am watching closely are the 2880 level, the 2900 level right here. And you will see as I show you the futures that we rebounded overnight, a nice rebound. Again, news got pretty negative the last couple days, and rightfully so. That it went about as bad as it possibly could. Intros between the United States and China. They're basically making sure, hey, expect this from us. Expect this from us. Don't do this. Don't do this. Doesn't lead to a great discussion up front. So candidly, things are not a great start there. But you're seeing the S&P 500 get near the 2915 level. So let's pay attention. This is, again, futures. So we are not open yet. This is pre-market. We actually tested this on, that would be Monday. We tested this Monday. I said, hey, probably test this. We tested a little higher after Fed speak and went lower. Again, these are just ranges here. This is nothing different than August, back and forth, back and forth. We're buying on the way down. We do think there should be some optimism based on some of the contrarian views that we're seeing, and we will show that to you. So the put-call ratio, which again, seeing the level of fear out there, people protecting portfolios or shorting, hit a high level on Monday, a relatively high number on Monday. The VIX spiked yesterday to around 20. Could it be higher? Yes, I wish it were. The S&P 500 obviously was down pretty hard yesterday. So again, some people can't handle the back and forth, but this is very normal trade movements, price movements. So keep that in mind. TLT, the 20-year Treasury Bond. What's going on with that? As we showed this weekend, if you missed it, over the last couple of weeks, it's been a 7.2% move. I'm actually kind of surprised we didn't see more movement here going into the TLT. I'm not disappointed in that because it likely could lead to higher pricing in stocks, meaning people saying, hey, this is a pretty extreme move. Not sure it was justified. So you're going to see headline news drive pretty much everything at this point because there are very few earnings. And so that's where we're making sure, hey, make sure your emotional intelligence is there. Know that these are normal moves, normal testings. And another thing that was kind of interesting that I wanted to show you down here, the correlation between the S&P 500 and gold gold has had a nice rebound recently. And when it tends to hit these levels, we either see a bounce or it obviously could go lower, but I wouldn't be surprised. We're kind of at a key level. So in question, I'm not saying it's going to go either way. It could be possible that gold and stocks go higher based on all the news that's going out there right now. It could be that gold continues to trickle higher. Same thing with the Treasury bonds. They could continue to go higher. So we're kind of at a key point here. It'll be interesting to see if we get a shift because there are a lot of good names that are down significantly. Again, we keep reiterating we want to see growth establish a base. We want to see the Russell 2000 get some bids. We're just not seeing people flow into the risk on assets yet. Hopefully today's gains that we're seeing here in futures hold. If this doesn't happen, you probably will test these levels. You'll probably test this level and be open-minded to that. It's about 1.4% lower. It's not fun. Some might say, why don't you prevent that? Because the move will be so fast you can't get back in time. That's the main reason why. So at this point, we feel like our entries have gotten in on the way down and have gotten some pretty nice entries, to be honest with you. So we'll see how today unfolds, and keep an open mind either way. Let us know if you have questions, but keep in mind your emotional exhaustion. It goes back and forth and can lead to a lot of dumb decisions. So we're making sure that we're staying healthy, we're doing the right things, watching price action rather than focusing on the news. So hope this helps. Thanks again. Have a good rest of the day, and we'll keep you posted.